Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. First of all, Happy New Year to everybody. I think we're probably all in agreement that it's nice to be able to put 2020 in the rearview mirror and look forward to what 2021 may have in store. In the last recording, I posed the question, could the Santa Claus rally, that time between Christmas and New Year's, signal the end of the melt-up that's occurred in the market? Boy, if today was any indication, certainly could be. Let's take a look at the charts and also talk about the January effect. At the time of this recording, it is midnight, straight up on Monday night / Tuesday morning Eastern Time, and currently the futures are down a point, so not a whole lot going on in the futures market, unlike what happened in the trading day today. As you can see, we had a pretty volatile day. In fact, I've been talking for quite some time about how I expect January to be a more volatile month, and not just because of today being the first trading day or tomorrow being the Georgia senatorial runoffs. So don't forget to hit that like button, or better yet, subscribe, because if I'm right and we are more volatile, we'll be posting these updates more frequently, and by being a subscriber, you'll be notified as soon as a video is posted. Talking about the markets, last night I posted a note to our subscribers who do that in addition to video webinars that we have, interactive webinars, where I was talking about this 370 level. Now, we've been talking about 381 for a long period of time. You know where that is. That's that top of the zigzag that we've been talking about forever. But aside from 381, 370 is a pretty good level of support resistance, as you can see. And in the note, I was commenting that wanted to see if 370 could hold for a potential move up to that 381 level. If not, then we're at least coming back down to test the 61.8, or we don't hold there, then everything could change. We've gotten awfully close to 381, didn't actually touch the line, but pretty darn close. So you can see what happened during the trading day. We opened higher, market sold off immediately. And then if you watch the market intraday, again, I watched the futures on a 3-minute chart as we trade throughout the day. We sold off, so we opened higher, sold straight off, bounced back up, and traded right around that 370 level all day, closing just underneath it. So that'll be another key level to watch in tomorrow's trade. Also wanted to show you the dollar. We're right down almost to that C wave extension, as you can see, which is also the wave 3 of the new 5-wave pattern to the downside. We did climb off the lows there, finishing with a doji on the charts, but the low of the day was 89.39, so we're within 40 basis points of hitting that wave C extension on that downward zigzag that started way back in June. So weakness in the dollar. But something interesting that I wanted to show you is if we look at the DMI, note back here when we were in the A wave impulse, or the wave 5 of the previous main 5-wave pattern, notice that move had a pretty strong ADX. Again, the ADX measures the strength of a trend. So that was a pretty strong move, indicative of, probably more weakness to come. But look what's going on now. Even as we're continuing to complete that C wave extension and in the wave 3, which you would think would be another strong move from the ADX or signal a strong move, it hasn't. So we have a bit of divergence here where the dollar is continuing lower, but the ADX is saying, but our move is getting weaker and weaker on the way down. So are we suggesting here that maybe that's the end of the downward move in the dollar, at least for a while? It would make sense, wouldn't it? The completion of that C wave extension, completion of a wave 3, and then we bounce up towards the wave 4. Again, the market doesn't always do what makes sense, but that certainly does. Also, we've talked about this. You got to understand the bond market if you want to be a good equities trader. So here we are looking at those same charts. Remember that on the 10-year, the interest rates, we have this ascending triangle pattern. And it looks like we tried to break out, but this is not a follow-through day. Talk about this quite often as well, that when you break from a triangle pattern, break a major support level, moving average, whatever, you need a second day, a follow-through day, because the market gives you lots of head fakes where you get a break and you think, okay, we're heading that particular direction. The market then turns and goes back the other way. It shakes out the weak hands, if you will. So even though we did kind of finish just flat on the day and traded lower, that doesn't count as a follow-through day. So I think we need to keep an eye on interest rates for a couple more days to get an indication of the breakout. And pretty much the same thing occurred here in the 30-year, which you would expect. But we have a symmetrical triangle here versus the ascending triangle in the 10-year, which we pointed out in the last recording. On the DMI, you can see they're pretty similar. We're getting a little bit of upward movement in the ADX. We're getting some separation here. So the DMI is actually indicating, hey, we may be getting ready to have a bit of an upward breakout in interest rates. We feel that interest rates are going to move to the upside as well. Too early to call it, because you need that DMI to actually give you the signal. Quite often it'll give you setups like this and then it doesn't follow through. So we want to see those actual signals occur, which is the ADX breaking above 20, being between the two directional indicators, and good separation between the two. Looking at the metals, had a nice move to the upside today in silver. Going back here, talked about this in the past as well. With Elliott wave triangles, when you get the breakout of a triangle, at some point the breakout move will be retraced. In other words, you'll move back towards the breakout point. There's not always a rhyme or reason for when that will occur. Sometimes it occurs rather quickly. Other time it's like this, where it takes a number of months. But note, we had been back up there and we broke above that level today. So this is kind of like a support resistance level, there being the breakout point. So we want to see if we get follow through in silver tomorrow. Gold, a little bit of a different story. Gap up. Note that we didn't get that kind of a gap up in silver that we got in gold. So a big move to the upside there. Tomorrow will tell a lot. We haven't looked at copper in a while, so I thought I would bring up a chart of copper. As you can see, copper's been in a wave 3 in the big Elliott wave pattern. Really nice move to the upside. Here you can see how strong that ADX was. Getting to the point where it's showing you, hey, the strongest part of this move is over, at least for now. So that warrants this consolidation that we've been going through. Remember, we talked about copper before. We did a recording called Dr. Copper, where copper is viewed as a precursor of economic strength. Copper's doing well. Usually the economy is doing pretty well. But remember, the market looks ahead, so it's not necessarily telling you what's going on right now. However, with this small triangle here at the end of the wave 3, bears watching to see which way we go from here. Do we continue to break to the upside, or are we going to break to the downside, signaling that maybe whatever little economic strength that we had, could this be from the stimulus money? And then that's the end of it and we break down. I think copper is something that needs to be watched very closely over the next couple of trading weeks. And then, as we always do, finishing with the VIX, take a look there and you can see that we weren't able to break below that 20 level. Thought maybe with the Santa Claus rally, with a really quiet time, that could bring the VIX down, break the 20 level, go through here and fill this gap that occurred back here in February. Didn't happen. The 20 level held, back up, came back down, tested it there towards the end of December. Really not a very low movement in the VIX, considering what a quiet time that it usually is between Christmas and New Year's. In fact, today started off with a bang, so to speak, with the big move to the upside. One final note, the last trading day of the month is normally a bullish day, because that's when all the new money goes to work from all the dollar cost averaging programs, retirement programs, IRAs, 401ks, etc. That leads me into what I mentioned that I was going to talk about in the beginning, is the January effect. The January effect is a perception or hypothesis. Those aren't really strong words, are they? Perception or hypothesis that the month of January outperforms the rest of the year, especially in small caps. Solomon Smith Barney actually did a survey where they found that small caps outperformed by 82 basis points. That's almost a full percent, so that's not that bad. The January effect actually is credited back to an investment banker named Sidney Watchell back in 1942, who noticed that this phenomenon, if you will, occurred in the month of January. Why? Well, there's a couple of different reasons or thoughts behind why January might be a better month. Number one, in the month of December, quite often there's tax loss selling, where people sell their losers to purposely create losses to offset capital gains. And then when January comes around, then they start looking to put their money elsewhere, buy some other underperformers, etc. But they actually have some money to put to work. In addition to that, the investment banking firms use their bonuses, the end of the year bonuses that they receive, to put that money to work in the month of January as well. So thinking that there's extra money that goes into the market in January above and beyond those normal dollar cost averaging programs. But as with everything else in the market, nothing's 100%, nothing works all the time. So what do you think? Post a note. Do you think January is going to outperform the rest of the year? Do you believe in the January effect? Leave us a comment. Tell us what you think. We'll see how things play out throughout the rest of the year. Hope you've had a great start to your year. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.